Hi friends, welcome to the channel JIV and CIV Made Simple. So this is our IIBF CCFE, that is certification course in foreign exchange, memory based question and answer session, and we are discussing the question which appear in the examination on 24th January. So our main focus in this session will be to solve those case study based question only. You can see I have created only case studies based question. So start practicing the first one, try to solve the question on your own, listen to the explanation and see whether your interpretation was correct or not. So let's get started with our very first question. So this question is all about, it is talking that Global Tech Corp, which is a beneficiary, right, and they receive a letter of credit for how much? For, I think they have given $5 lakh through their bank A. So they receive a letter of credit for $5 lakh via their bank, which is the bank A. Now this LC is issued by the issuing bank, right? Obviously you know it very well that as issuing bank issue the LC through the Swift MT700. I think you know it very well. So that LC is issued via Swift MT700, right? Now MT700, what is MT700? So this is the official message used to issue a new LC. So what happened at this stage, So at this stage, LC amount, as you can see, is $5 lakh, right? LC amount is how much? $5 lakh, and terms are fixed and legally binding. Now what happened? Due to production delay, there was a production delay. So let me write down what are the key facts that we must keep in the mind. That MT700 is the language, right? Is the official message used to send the new LC. MT700 is a message used to issue a new LC, right? Now what happened? Due to production delay, basically the Global Tech Corp asks for two changes. That extension of the shipping date first of all, and increase in the LC value to $5,50,000. Right, the issuing bank agree about it and send the changes using MT707. So the question is basically a week later the second beneficiary is added to the transaction for a portion of the credit, right? So the question is, which of the following represent the correct sequence of the Swift message and the legal status of the transaction? First 700, then 701, then 707, and the LC value is officially $5,50,000 at the moment, and MT707 is received by bank A. Option number B, first will be MT700, MT707, MT720, and the original MT700 term remain legally binding if the Global Tech Corp reject the shipment date change in the MT707. Option C, 701, 710, 707, and MT710 is required because a second beneficiary was introduced to the transaction. And option number D says 700, 707, 799, and 799 must be used to legally confirm the price increase before 720 can be issued. So these are the four options that they have given you. So let's get started. So first of all, what is happening here? That due to production delay, Global Tech Corp asks for two changes, right? What are the two changes? So extension of the shipping date and increase in the LC value from $5 lakh to $5.5 lakh. This is what Global Tech Corp asked for. So what happened? Issuing bank agree to okay, I'm ready. So issuing bank agree and they send the changes using MT707. So remember it, this is a very important point, that this MT707 is an LC amendment message. Any kind of amendment related to LC, right? This is called MT707. What about MT700? So MT700 is the official message. Please understand, it is the official message used to issue new LC. So whenever we issue new LC, the official message that is used, that is MT700, and MT707 is the LC amendment message, right? I hope it is clear. So so at this stage, right, production delay we have discussed. So MT707 is used for LC amendment message. It may be used to send change in amount. Suppose there is a change in amount, or suppose there is a change in shipment date. There is some change in the shipment date or any other modification in the LC term. For that we use MT707. So please remember, MT707 do not automatically become effective. Very important thing I'm telling you, that MT707 is an LC amendment message. This is quite clear. But remember, MT707 does not automatically become effective. It does not become effective automatically. Then how it will become effective? So amendment become valid only after the beneficiary accept it. So beneficiary has to accept. Then only MT707 will be active. So acceptance of the beneficiary. So if Global Tech Corp accept the amendment, Obviously, Global Tech Corp is on the other hand, right? So if Global Tech Corp, who is the beneficiary, he accept the amendment, then LC become $5,50,000. But he reject the amendment, then LC continue with the old MT700 terms. Please remember it. That means that original LC of $5 lakh remain legally binding. New shipment date does not apply unless this Global Tech Corp accept it. Right? What happened? Has he accepted? Okay, now addition of second beneficiary. 1 week later, a second beneficiary was added, right, for the portion of the credit. This means the credit is transferred partially to whom? To the second beneficiary, to the other party. For this purpose, what is the correct SWIFT message? For this purpose, the correct SWIFT message is MT720, which is regarding transfer of documentary credit. Please understand, MT720 is about transfer of documentary credit. It is specifically designed, MT720 is specifically designed for transferable LC. And suppose you want to transfer credit to a second beneficiary, then MT720 is used. So what will be the correct sequence of this question? So MT700, then MT707, and then MT720. This will be the correct sequence, right? And the legal position is, if Global Tech Corp rejected this MT707 amendment, then original MT700 remain valid and binding. So now let's look at the option. Option number A says that MT700, 701, 707. It is wrongly saying 707 is effective immediately, right? It is saying that LC value is officially 5,50,000 the moment MT707 is received by bank A. No. It is wrongly saying that MT707 is effective immediately. No, because beneficiary acceptance is mandatory for MT707. Option number B, yes, it is correct. It is correct. 700, 707, 720. Original MT700 terms remain legally binding if Global Tech Corp reject the shipment date changing the MT707. That is the basic concept to note. What about option C? Option C says that 701, 710, 707. It is wrong. You know it very well that this 710 is only for advising LC. Please understand, these are the SWIFT message that you must keep in the mind. So MT710 is for advising LC through another bank. Suppose we want to advise LC through another bank, then MT710 is used. It has nothing to do with second beneficiary or transfer. What about option D? It is 700, 707, 799. See, 799 if we talk about, it is just a free format message. 799 is a free format message. It has no legal effect for LC amendment. Right, price increase must be done by MT707 only. So let's quickly summarize what we have discussed so far. What are the three SWIFT messages we have covered? So 700 is about the original LC issuance. It is all about the original LC issue. 707 is all about the amendment. Suppose you made any amendment to LC. Then and 707 is there. And 720 is about transfer. Is about transfer to second beneficiary. And amendment rejection, then old LC terms continue. What about 799? 799 has no legal standing. 799 has no legal standing. So please remember 700, 707, 720 is top source for the foreign exchange operation examination. You can check out our comprehensive program. In this program, you get separate folder for theory, MCQs and case studies PDF. In this folder, you get theory plus MCQ PDF, previous year question. There are almost 8 previous year files we have added, which we have collected for the entire year, starting from February 25 till the January 26. And also, there is a proper explanation of all this question. In addition to that, you get theory and MCQ PDF, all covering the FIDE book. So these modules, 5 modules are there, right? And all the 5 books have been covered. All the 7 books have been covered in all these 5 modules, and separate case studies folder I have added to cater to the need of the student where question is being asked for case study. And if you want to revise quickly the entire concept, check out the module wise quick revision PDF. Not only that, I have also added videos, unit wise theory video explanation, which cover videos module wise for A, B, C, D and E video. You can watch the video, you can download the content for your offline watching. So friends, this is the number you can WhatsApp on for more detail regarding the study material. Now friends, let's shift our focus to the question number 2. Question number 2 pertains to DOCDEX. Every time this question is being asked. So let's have a go through the question. So basically, let's understand what the question is all about. First of all, two banks are fighting over a demand guarantee of $1.2 million. See, there is a demand guarantee. There is a dispute going on. For $1.2 million demand guarantee, two banks are in dispute. And it is governed by URDG 758. Obviously, which is the ICC rulebook for demand guarantee. Since the bank cannot resolve the issue between themselves, the claimant bank decide to go for DOCDEX decision. Fine. Now, so basically what happened, one more point they have given exceptionally complex. Right. They have mentioned here that due to involvement of the multiple set of complex maritime document and conflicting local law, the ICC determined this case to be exceptionally complex. After 75 days, the 3 expert panel issues a decision in favor of the claimant. So based on the ICC DOCDEX rule, which of the following statement is true? The total fee of the dispute will be exactly $10,000 and the decision is legally binding on both the bank as a result of the URDG 758 jurisdiction. Option number B, the total fee could reach a maximum of $15,000 and the decision can be used to persuade the counterparty, though it is not legally binding. Option number C, the dispute is ineligible for DOCDEX because the DOCDEX only handle UCP 600 dispute and not demand guarantee. D, the fee will be $7,500, out of which $5,000 standard and $2,500 complexity fee, because the dispute amount is calculated based on the loss profit. So 4 options have been given. So very good question it is. First of all, what is DOCDEX? Let me explain a little bit about this DOCDEX. It stands for Documentary Credit Dispute Resolution Expertise. Every time one question is being asked, so please have a clear clarity of this DOCDEX. Even though if you don't have the basic, I will make it clear. So Documentary Credit, D for Documentary Credit Dispute, right? Dispute Resolution Expertise. So in simple word, it is an expert opinion system. Who run it? ICC run it. Expert study the document. After studying the document, right, and the ICC rule, expert study it, they give some decision. So expert study the document, expert study the ICC rule, and they give the decision. Important point is that DOCDEX decision are not automatically legally binding. Please understand, they are not automatic legally binding. Very important thing. They are not automatically legally binding unless both the parties agree in writing beforehand. So both the party have to agree in writing beforehand, then only they will be legally binding, otherwise no. So now in this case, why it is called exceptionally complex case? They have mentioned now that it is so they have mentioned here that in this case there are multiple maritime document, right? In this case they have mentioned that they have multiple sets of complex maritime document, different local law or conflicting local law. Interpretation is not straightforward. So because of this, the ICC for ADR classify the case as exceptionally complex, and after classification this allow ICC to appoint a 3 expert panel and charge an additional complexity fee. Now, time taken for decision. How much time it take? The decision is issued after 75 days. This is normal. This is normal because complex take longer. More experts are involved. Multiple documents are examined. What about the DOCDEX fee? That is what the question is. Now comes the exam point. Please remember, how much is the dispute amount? See, dispute amount they have mentioned. It is how much? $1.2 million. And this fall in more than $1 million. So dispute amount is $1.2 million and which is larger than $1 million category. And a standard DOCDEX fee is how much? $10,000. $10,000 is the standard DOCDEX fee. Since the case is exceptionally complex, so ICC can charge up to 50% extra. Since this case is exceptionally complex, so ICC can charge how much? 50% extra it can charge. That is, what is 50% of $10,000? It is $5,000 additional. That is extra additional charge. So what will be the maximum total fee? The maximum total fee will be how much? It will be $15,000, right? Now let's talk about the legal status of the decision. See, so basically the decision, the expert decide in the favor, right? If you look at the legal status, the expert decide in the favor of the claimant. But remember, this decision is not legally binding by default. It is used to persuade the counterparty, support negotiation, strengthen the court or arbitration argument, right? See, if you talk about the legal status of the decision, what expert decided? Expert decided issues a decision in the favor of the claimant. Okay, but it is not legally binding by default. It is used to persuade the counterparty, support negotiation, strengthen court or arbitration argument. It become legally binding only if both bank has agreed in writing beforehand. If they have agreed in writing beforehand, then only it become legally binding. Now let's look at the option. If you look at the option number A, it says that decision is legally binding on both the bank. No. This is wrong. Just now I told you that the DOCDEX decision are not legally binding. Very, very important. So please remember it. And one more point, URDG 758, right? URDG 758, right, does not make DOCDEX compulsory on binding. It does not make DOCDEX compulsory. It never makes DOCDEX binding, right? So option number A is completely wrong. It says that total deposit of the fee is exactly 10,000. This is also wrong. What about B? It says that total fee could reach a maximum of $15,000. Yes, it is correct. Yes, it could reach $15,000. Right, very good. And what about the second part? Second says that the decision can be used to persuade the counterparty, though it is not legally binding. Exactly. B is the correct one. What about option C? Option C says that the dispute is ineligible for DOCDEX because DOCDEX only handle UCP 600. Please remember that DOCDEX cover all these things. It cover UCP for demand guarantee only. And the standard fee, please remember, if the amount is above $1 million, if the amount is above $1 million, the standard fee is $10,000. This is the fee. Please remember it. An exceptionally complex case, that if up to 50% extra fee it will be charged. That is if it is an exceptionally complex case. If the case is complex, then up to 50% extra, extra fee is charged. So maximum in this case is $15,000. And remember, they are expert based, persuasive in nature, not legally binding unless agreed in writing. Remember this key point and you will be able to crack any question based on DOCDEX. Please hit the like button if you really think that this video is adding value to your preparation. Now have a look at the question number 3. Question number 3 pertains to LET document. So let's understand what is exactly happening in the export process. The exporter has already filed the shipping bill with custom. So filed shipping bill with the custom, first point. The shipping bill is the basic export declaration, right? Shipping bill, is the basic export declaration. Without it, no export process can move forward. Now what happened? The custom officer checked the detail and confirmed that the goods is not in the prohibited list. All export declaration are proper, right? Goods is not in the prohibited list. All export declaration are proper. So obviously, this verification is a regular check. And custom ensure legality, not commercial viability. Now what happened? The officer then stamped the electronic record permitting the container to be loaded onto the vessel. Obviously the question is, which of the following describe this specific milestone and its primary implication? Option number A, the goods have achieved out of charge status, meaning they are now exempted from all the future audits. Option number B, the LET, that is late export order, have been issued and the goods are now legally authorized for loading and export is considered finalized for custom. Option C, bill of lading has been issued which serve as the government permission to export. Option D, the goods are in bonded warehouse status, meaning they can only be exported if the bank guarantee is provided. So you have to go through this case study and you have to answer which is the correct one. See, basically what is the step number 1? Step number 1 is the billing is filed, right? This is the step number 1, which is called, filing of bill, right? Filing of shipping bill. See what is happening, that exporter has already filed the shipping bill with whom? Exporter has filed the bill with custom, right? And the shipping bill is the basic export declaration. It is the basic export declaration. Without it, no export proceed can move forward. So without this shipping bill, right, no export proceed can move forward. Very basic. Second step, this is the first step, filing of the bill. Second step is the custom verification. So the custom officer check the detail and confirm that goods are not on the prohibited list. That is what custom order verify, custom officer verify, and all the export declaration are proper. So this verification is a regulatory check. And the third step we have is the electronic approval by the custom, which means after verification he stamp the record and allow the container to be loaded on the vessel. This electronic approval is what we call LEO. That's called late export order. Late export order. So what is LEO? Please understand. So it is the final and the most important export permission issued by the custom. Please remember, LEO is a kind of permission. Who give this permission? Permission is given by the custom. right? In simple word, it is an official green signal for export. Without LEO, cargo cannot be loaded. Please understand, without LEO, you cannot load the cargo. And ship master cannot legally accept the good. Obviously, and you cannot load the cargo. Ship master will not accept the good, right? So once LEO is granted, after LEO is granted and permission is given, then only custom formalities are considered completed, and custom will not interfere unless there is a fraud or misdeclaration. What is the legal effect of LEO? See, if we talk about the legalities of the LEO, please understand that goods are legally authorized for loading. After issuing of the LEO, goods are authorized for loading, and export is finalized from the custom point of view. From custom point of view, export is finalized. Document can be now used for drawback, GST refund, export incentive, etc. Now let's look at the option. Option number A says that it is become out of charge. No. See, out of charge is used only in the case of import. Means goods are cleared into the domestic market. Has no relevance to the export. What about option B? Option B says LEO. Yes, correct. B is the correct one. See, just now I told you the goods are not legally authorized for loading and export is considered finalized for custom. What about bill of lading? No. Bill of lading is issued by the shipping line or it is issued by the carrier, right? It is a contract of carriage, title to good, not a government authorization. What about D? Bonded warehouse. It refers to the storage of the good, usually used when duty payment is deferred. So please remember the quick revision. So please remember shipping bill. Whenever you see this word shipping bill, so this is all about export declaration. Shipping bill is needed in the case of export declaration. What happened? Custom verify the goods. So the question is that Solaris Tech Private Limited is an Indian manufacturer of what? Of hybrid hybrid solar inverter, right? With annual turnover of 12 crore and export destination is Germany, right? And the product fall under the HSN chapter number 85 electric machinery. I have everything. Now what happened? Domestic compliance. So for domestic GST invoice, India allow relaxation based on turnover. So here you can see they issue a 4-digit HSN code on their invoice, right? Now LC requirement, again they have mentioned that now comes the export transaction, which is totally different world. The foreign buyer open a letter of credit. The buyer open a letter of credit which specify that commercial invoice must mention the full 8-digit HSN code, right? And the mistake that they have done is that the export manager prepared the repo in export invoice using 6-digit like this, right? He assumed that 6 digits are globally accepted. Bank will be flexible. Now bank objected. When the document are presented to the negotiating bank, bank noted that he requested 8-digit, but he had just given 6-digit. So they objected on the basis of strict compliance, right? So that is the point. Now the question is, based on the HSN rule provided, why would the negotiating bank and Indian custom flag this transaction as non-compliant? Option number A, because Solaris Tech has a turnover greater than 5 crore, they are legally required to use 8-digit. Option number B, because for import-export transaction, the 6-digit universal code is insufficient. The 8-digit statutory tariff item is mandatory for custom. Option number C, because the first 2 digit of the HSN code changes when a product moves from domestic market to international market. Option number D, because 4 digit are only allowed for business with a turnover under 1.5 crore. So let's not go through each and every option. First of all, what is happening here, that this Tech Private Limited is an Indian manufacturer. They have annual turnover of 12 crore. Export destination is Germany. And this kind of product that they are selling, it completely that's called hybrid solar inverter. This completely fall under HSN chapter number 85 under the electrical machinery. Chapter number 85 electrical machinery. And more specifically, if we talk about, this is about 8504, which is static converter. Now, domestic versus export HSN uses. For domestic GST invoice, India allow relaxation based on the turnover. Please understand. This is the basic thing. Please remember it. For domestic GST invoice, India allow relaxation based on the turnover. For what? Domestic GST invoice. Right. So what India allow, that suppose there is a business with turnover more than 5 crore. Right. So they must use 4-digit HSN for domestic B2B transaction. This is the relaxation. That suppose the business is turnover is more than 5 crore. So they must use 4-digit HSN for domestic B2B transaction. That is why Solaris Tech normally use 8504. This is perfectly correct for domestic GST compliance. Now what does the LC say? And now comes the export transaction, which is totally different world. The foreign buyer open an LC and it says that commercial invoice must issue 8-digit HSN code. And in LC transaction, this instruction has become mandatory. It become what? Mandatory, not optional. The critical mistake they have done, that export manager prepared the export invoice using 6-digit, that is 8504.40. He assumed that 6-digit are universal standard, so bank will be flexible. But this assumption is very wrong for export and LC transaction. So bank work on the principle of strict compliance. Bank work on the principle of strict compliance. That means document must match the LC term. Partial or approximate compliance is not allowed. Since LC demanded 8-digit, invoice so 6-digit, so negotiating bank is legally correct in raising an objection. And this alone is enough for discrepancy, payment refusal or delay. So now why Indian custom object? See, one more thing they have mentioned, that furthermore the Indian custom agent refuses to file the shipping bill because it could not sign. One more thing is that export are governed by the, please remember it, very very important thing I'm telling you, that export are governed by the ITC HS, which is Indian Trade Classification HS. So for all the export and import shipment, India required 8-digit HSN. The last 2-digit indicates the tariff rate. Please understand, the last 2-digit indicate the tariff rate, export benefit, restriction or incentive. Since the shipping bill cannot be filed without 8-digit, so custom rightly rejected the filing. So key rule to remember is that turnover based HSN relaxation apply only to GST invoice. For export and import, 8-digit HSN is compulsory no matter what the turnover. If you look at the option number A says that 8-digit not, so it says that since the turnover exceeds 5 crore, so they are legally required to use 8-digit. See, 8-digit are not mandatory for domestic B2B invoice. If it is business to business invoice, domestic one, then 8-digit is not mandatory. GST law relaxation even above 5 crore. So option number A is wrong. What about option number B? Yes, B is correct. It says that because for export import transaction, the 6-digit universal code is insufficient, the 8-digit statutory tariff item is mandatory. Yes, B is correct. What about C? C says that the chapter first 2-digit never changes. He says that it changed. The first 2-digit change when the product moved from domestic to international. No. Actually, the first 2-digit indicate the chapter. It never changed. Classification remain constant globally. What about option D? It says that 1.5 crore rule is outdated and irrelevant here. So export rule override turnover based GST relief. This is completely wrong. So option number B is the correct answer. What we learned from this discussion is that 4-digit oblique 6-digit. So these are only for domestic GST invoice, right? Domestic GST. 8-digit is mandatory for export, import, shipping bill and LC document. Remember, whether it is export, whether it is import, whether it is LC document, 8-digit is mandatory. LC rule strict compliance, custom rule statutory tariff item required. Turnover has no relevance in export HSN. So please remember, GST invoice, just remember this point, very important thing I'm telling you, that GST invoice, I think this is okay. So GST invoice turnover matter, whether it is less than 5 crore or not. 5 crore, and export invoice 8-digit is compulsory. That is the moral of this question. Friends, we have more question available in our PDF. The remaining question will be shared, will be explained in the paid course. If you want to get access to those, you can WhatsApp me on this